Welcome to the Startup Grind.
All right, let's go ahead and start. So everyone, I'd like to introduce Brian Bell, and Brian's the founder of Ignite Ventures. Is that right?
Team Ignite.
Team Ignite. I knew there was 3 words to it. Team Ignite Ventures. And actually, instead of me trying to introduce that, why don't you tell me about some of your background, Brian?
Yeah. So I'm from Seattle.
Go Dogs.
Yeah. Born and raised. Finance undergrad. Worked on Wall Street, real estate, all that stuff for the first decade. And I'm losing my voice, so I'll try to speak up as much as I can. Wandered around in my late 20s trying to figure out what I'd do with my life. And it's a long story, but ended up in tech, as one does in Silicon Valley. And ran demand gen teams for a few VC-backed startups. I built product for a few more. Built a bunch of ad tech, martech, sales tech. So I was resonating with your presentation. Very good presentation. Bunch of AI-powered things, and got pretty deep in AI about 10 years ago, and led AI at AWS. I launched a SageMaker marketplace there. And then I got recruited by Microsoft to go lead all the categories for the Azure marketplace team. So I ran this large team that scaled startups at Microsoft, and realized I was having a lot more fun helping founders than playing Game of Thrones at Microsoft. So it's true. Angel invested. It always gets a chuckle. Angel invested for a couple of years, LP in a bunch of funds, and then about 5-6 years ago, I started Team Ignite with a mission to build a network that scales startups. And we started. I remember the very first person that joined Team Ignite, and the very first syndicate I ever ran. Almost 6 years ago now. And after a couple of years, we realized we couldn't syndicate the best deals. They moved too quickly, especially like now with AI. Deals move very quickly. You can meet a founder on a Monday and it's closed Wednesday or Thursday. And so our first fund was a YC-focused fund, because those were the rounds we were getting pushed out of back in 2021. And that fund's performed really well. And then we raised a seed fund for Fund 2, and that focused on pre-seed and seed, B2B software, fintech AI marketplaces worldwide. Most of what we do is in California. I moved out here. Why am I here in Folsom? I moved out here from Silicon Valley during COVID, as some of you probably did. Just a better, I have 3 kids, better place to live and raise my kids. And we're now deploying out of Fund 3. We'll raise another fund next year, probably the year after. So far so good. We have 260 portfolio companies now, so we're having all the founders help each other, which is pretty exciting. We have a couple thousand VCs that co-invest with us and follow on with us. Team Ignite's now over 10,000 people.
Really?
It's a very large network of operators, tech execs, founders, LPs, partners, consultants, anybody you can imagine that a startup would want to talk to. Or so we're known for helping our founders fundraise, doing those customer introductions, and talent acquisition. Finding the right founding engineer or the right head of sales. So that's a little bit about me.
Okay.
Yeah.
So what is it? That you look for in a startup that you're interested in investing?
Yeah, I love to kind of, with tongue in cheek, say I kind of know it when I see it. But as a VC, you look at thousands and thousands and thousands of deals, right? And so there's probably 20 or 25 things we care about, and the first 5 of them are team, and team. Especially in the early stages, right? You're trying to assess why this team, why now, and the team thing I could talk about for an hour, but it's sort of like one of the rubrics I like to use is, would I work for this person? Like if the tables were turned, would I go like, and you found a good founder when you're like, oh, maybe I should like shut down my venture capital firm and go work for them.
Wow.
Like that's like, you're like, wow, this is like such a good idea with the right team at the right time. For AI, I mean, it's all over the stack. If this is an AI talk, so I'll try to bring it back to AI as much as I can. And we do a lot of AI. It's not all we do, but for AI in particular, it depends on what part of the stack. When you get a platform shift, it kind of whipsaws up and down the stack. It kind of starts at the foundation model layer in this case, right? And now it goes to the networking layer. and then the platform layer, and then the application layer. And at the application layer, you have like thousands of flowers blooming, right? And so it depends on what part of the stack and like the timing of what you're looking at. So we missed the foundational model layer, right? I had to be an investor 5 years before I was investing to try to get, or at least a few years before I was investing to get into some of those companies. But we do have some really good bets at the networking layer. We have a company called Thunder Compute that's trying to virtualize GPUs at the data center layer level, kind of what VMware did for servers 25, 30 years ago. So they're trying to virtualize GPU clusters. We have lots of great platform plays. Blend AI is a portfolio company. I call them a Soonicorn. I think their last round's like 500 million, growing super fast. Some of you guys probably, they compete with like Retail, 11 Labs. And there's lots of application layer stuff in the portfolio. I think what's interesting right now is, AI is eating software, generating more software, and AI is also eating labor. So for the first time, I think you can actually take capital and apply it to a business and replace labor, or at least make it 10x more efficient. And that's a completely different thing. It's a completely different equation on share of wallet. You think about SaaS, 10 or 15 years ago, you'd be lucky to capture 5% of the revenue of a company with your SaaS. And I think the long-term average was 2%. But with agentic AI, we're literally, with outcome-based pricing, you can capture a much higher percentage of the actual revenue of a company that you're targeting, because you're actually getting jobs done for them. And you can measure that in the outcomes. Anyway, I'm blabbering on.
No, that's fine.
Yeah. Yeah, so AI is eating software, but it's also eating labor, right? It's directly replacing labor. Yeah.
So like the secretaries,
Yeah, there's lots of great examples. Harvey's a great example in the law space. I think they're valued at $5 billion. They're basically going into law firms and getting a lot of the paralegal work done and some of the kind of the low-level associate level work. We have a company called CollectWise in the portfolio, growing super fast. They use AI to do debt collection, and so debt collection is typically done by call center farms overseas. You say, hey, some call center in the Philippines, go call and collect these debts, and so companies are really trying to collect these debts. They're really paying people to do it, and they pay it on a contingency basis. And so this startup says, well, hey, we can just use agentic AI to do that. And they're just killing it, just growing super fast.
You have robots like breaking people's knees.
Yeah. Yeah, exactly. AI mafia, breaking kneecaps. Yeah, lots of exciting things there.
So so with 6 years, do you have any like early exits that you could talk about?
Yeah, so exits are a funny thing for early stage, right? Because the average B2B software company, enterprise software company, takes 9 years to exit, right? That's the average. And the average exit's $249 million, depending on the data set you look at. And so as an early stage VC, I really started deploying other people's money in about 2020. So I'm only 5 years into this journey. It's something I wrestle with on Fund 1 because I have a Soonicorn, that could double my fund. I could liquidate it. But then maybe I miss out on another 10 or 50x upside in my fund, right? So it's a delicate balance. Lots of good markups, lots of traction. I have companies 10xing revenue year over year and stuff like that.
So on average, and if you invest in 10 startups, how many will be successful and how many will?
Yeah, so this is another differentiator for Team Ignite in the way we look at venture capital, because I worked on Wall Street. I ran Monte Carlos on portfolios of CFA and all that stuff. So when I got into the industry, I look at it differently. I kind of look at it like a money manager would. Hey, how do I create a predictable financial product here in this asset class? And if you run the math and you run Monte Carlos on venture capital portfolios.
What does Monte Carlo mean, by the way?
Oh, a Monte Carlo, it's a simulation of probabilistic outcomes. So if you run it over and over again, there's an emergent distribution of outcomes. Mm-hmm. So anytime you make an investment, depending on the stage, pre-seed, you have about a 1% chance of becoming a unicorn. Seed is about 2%. Okay. And so that's the probabilistic math. And so you could actually run a probability equation and just with very simple probabilistic math, understand how many startups would I need to invest in to guarantee, or almost guarantee with like 3 nines of precision, my probability of getting a unicorn, right? And so I've written articles on this on my Substack and stuff.
So what is that number?
It's about 300. It's about 300, yeah.
To get one unicorn.
Well, no, not to get one unicorn. It's to virtually guarantee one unicorn is 70 or 80.
Okay.
But to maximize your risk-adjusted returns, about 300.
Okay.
Yeah.
So what are you at now?
I'm almost 300. Yeah, I'm at 260.
Okay.
Yeah. So I did 36 in my fund 1. I'll do about 150 in fund 2 and 3, and I'll do 300 in fund 4.
All right. What's when you're talking to a startup, what is a red flag where like, okay, I'm done?
Yeah, I would say outsourced engineering. You don't have a technical co-founder. Typically, it's pretty hard to build technology if you don't have somebody in house that has the sweat equity. That would be a pretty big red flag. It's hard to overcome that for me. There's other kind of reddish yellow flags like cumulative charts. Never put a cumulative chart in your slide deck. The VC will detect that and it's like, no.
What does that mean? What do you mean by cumulative chart?
So you have 5,000 in monthly revenue, but it's not growing. But you're showing it went from 5 to 10 to 15 to 20.
Oh, just predictive. Yeah. Okay.
Yeah, so it's going up and to the right every month, right? You're doing so great. I have about 20 or 25 of these in my rubric, so it's not like at the tip of my tongue, but and increasingly my thinking's offloaded to AI, just like everyone else's, right? So like a lot of what we do is use AI and automation to move faster and make quicker decisions. So like our prompt to evaluate a startup, and I've made the prompt not public, but where any startup can go like dump your files in and get feedback on what I would see as a VC. We're on like version 150 of that. We've back tested it on like thousands of deals. And so we got it pretty well defined on what we look for and what we don't like. You're looking for founder market fit. I think if, one thing I think I like to see, and if I don't see it, it's kind of a yellow flag, is kind of a history working together. I think startups are really hard. You got to find a co-founder that you know and trust and you have a history with. If you go look at every single like YC team coming out, and they only take 1% of people who apply, virtually every team in there has history together. They virtually won't take a team, and they've done 5,000 investments over 20 years. They kind of know, they have a lot of data, right? They know what they're looking for. So I think that's another one.
Yeah, but did you go through like YC startup and as part of their training data?
Well, I just do a lot of YC. I have the YC focus fund,
right.
And yeah. So I see a lot of really. What's great about having a YC focus fund is it really attunes my radar very high, because the teams are so high quality. About half of what I do is YC and half of what I do is non-YC. And so when I look at non-YC teams, I'm already like thinking like, are they good enough to be in YC? Because I meet hundreds of YC teams every year, and so I'm already like trained in that way. It's like a muscle memory.
Okay.
Yeah.
You had a question?
Yeah, I just had a quick question. I mean, you mentioned a team, but does it freak you out at all if the cap table is all split up already at the start? Like, is there a smart way of doing that where it doesn't like? Because I mean, the alternative is you meet a founder who's just super lean, they're cash flowing well, they're subbing out a lot of the work, they build all the technology themselves, and that's the opposite of like 6 buddies from college fraternity get together and make a startup. I'm curious your thoughts on that. Also,
Yeah.
you tell us back in the day, like the biggest thing to move the needle for the VCs was just to have a really good like CTO, someone who has a history of building scalable technology. But with AI just advancing so rapidly and anybody being able to generate scalable technology, does that shift things for you? Is it a sales guy now that's like huge? Or?
Yeah, those are great questions. I'll take the cap table one first. Assuming you haven't raised any money, right? And this is like the first round, you're raising like a $500K, $1 million pre-seed round or something like that. I would look at founder vesting. I don't care about the founder splits as much. So it could be chopped up amongst the founders, however you guys agreed to chop it up. But I think it's important that there's like a 4 or 5 year vesting schedule with a 1 year cliff on that. Especially as you raise capital and get a lead, they're going to really care about that. Your second question is really about moats, which is really interesting. I don't think, I think moats are, I got to be careful what I say here. I think they're less important than they have ever been. And I think execution is one of the most important moats, because speed and traction kind of solve everything else. Like if you're executing and growing and acquiring customers and they're not churning and you got good net dollar retention, logo retention, like you're going to figure all the other stuff out. What the most important thing about building a startup is you're building something that people want. That's what YC says, if anybody's familiar with that. Build something people want. And then if they want it, they will pay for it. And then if they pay for it, then you'll have more money to go solve more of their problems over time. It's actually quite simple, but it's really hard, right? I think people get all caught up in all like, oh, what's my moat? I don't think Airbnb knew what their moat was when they started, or Stripe knew what their moat was when they started. They were just solving people's problems. You'll figure out the moat as you go. You'll build more IP. You'll get patents. You'll develop proprietary models. You'll fine tune open source llama models, whatever. You'll build your moat over time. Sometimes there are moats inherent in the business. There's network effects. It's a two-sided marketplace. There's a book called the 7 Powers that talks about business moats. That's a good read.
John?
Yeah, I had a question about something similar to what he said about subbing out your work. I'm actually a developer. I developed the software myself, and then I took on an overseas guy in Lebanon to help me, do my back-end stack and everything else. I find it a lot more easy to use AI to basically do like the creation of the app, put all the code together, and between me and one other guy, like how Mark Zuckerberg did back in the day, we're just slamming the work out, and then we're not arguing with like 20 different developers. We're getting the work done, and it shows in the application that we put out. So would that still be kind of like a red flag? Because I've actually talked to VCs, and yeah, you're right, they don't consider me a business right now because they were like, where's your team? And I'm like, it's just me and one other guy. And they were like, but I'm like, well, with the money that you guys give me, I could go get a team, but I already got the work done. So what do you guys
If I had the money, I'd have a team. Yeah. I think if you're building a startup, which startups are typically technology companies, you got to have a technologist on staff as a co-founder on the cap table, right? That's like kind of a must-have. Now, if you start offshoring some devs, but they're still like the core CTO person,
I'm the core CTO.
I think I'm fine with that. And then so as I would evaluate you, like put my VC hat on, I'd be like, okay, where are the complementary skill sets on the team? If you can get a really good business co-founder that has good like founder market fit and could go open doors and land big enterprise contracts or whatever you're selling.
So that's what happened to me as well. A bunch of NBA players, one John Sally, he offered to be my co-founder for the business, and he's a celebrity basically.
Yeah.
I have actually a lot of celebrities that want to be my co-founder, but I wanted to be a right fit for me because
they're more better as like an advisor.
Yeah.
You give them like a quarter point of equity, and
but when they see the tech, they're like, oh my God, you got the next Instagram, or you got the next I want to be the co-founder, and I'm like, well, you don't even know how to.
Yeah.
I'm too easy.
What have you built before?
Yeah. To the table, so,
Yeah.
So Altman basically said that he predicts to see a one-person unicorn.
Mm-hmm.
Have you seen like one or very few, very small teams that are doing quite a bit?
Yeah, so I've definitely seen this over the last 5 or 6 years since I've been an investor. And before that I worked in startups for over a decade, so I've definitely seen it where you're more capital efficient than ever. I think good capital efficiency used to be like burn $1 million, get $500K of revenue. And now it's like burn $1 million, get $2 million of revenue is pretty good capital efficiency. And I see startups burn $1 million to get $10 million of revenue, which is like off the charts, like take my money, like I want to reinvest. So I'm definitely seeing that. I think the over-under is like, 20-30 for that bet, something like that. I like, look at what I do at Team Ignite. Like everything is AI, automation, contractors, almost 300 startups, investing in 100 a year. I couldn't do that pre-AI, right? So it's accelerating what I do as a VC in addition to the startups I back. So I believe in the future, all of us will be solo or like really small teams building billion-dollar companies.
Any other questions?
Kind of touched on it, but like finding the right people and knowing when it's time to find the right person, because I mean, like we're all business owners and we all wear 1,000 different hats. My guy's a developer, he's a marketer, he's everything to his business. When do you know it's the right time to find that person, and what do you think would be like the qualities you look for?
Yeah, so it's like a hiring question or co-founder question.
Yeah.
Well, I think I'll start with the co-founder question. I think if you're starting a company, you need two things. You need to build things and sell things, right? So ideally you have one of each. And then you can certainly benefit from maybe another person that like is a really good designer or something like that. So, but then on the scale part, you should only hire when it's so painful that you can't prevent hiring, right? So like, and you have to be careful how you hire. Usually you want to hire bottoms up, and you want to start with stuff that's kind of adjacent from the core, I think, a little bit. So like, like let's say you're ready to scale up sales. You're probably not going to hire just some badass VP of sales from some pre-IPO company or something like that. You're gonna hire an SDR, some guy or gal in their 20s, and say, okay, go for it. Here are a bunch of leads to go work and qualify. Does that answer your question?
Yeah. I guess I'm more for like people that are technical co-founders. Where do they find that business co-founder, and when do they know, I guess, it's a good time to go for that?
Yeah, so I've seen this in YC recently. Like, I see a lot of teams that, oh yeah, we've been friends since like elementary school, right? Yeah, I mean, so, but like, a startup's going to last a long time, longer than most marriages is the cliche. And so you want to go into the trenches with somebody that your friendship's going to endure, no matter what happens in the startup.
Yeah, I used to say, I used to spend more time with my co-founder than my wife.
Right.
He used to call my co-founder my husband or his wife or whatever.
Founder spouse or whatever.
Yeah.
Co-founder spouse.
Yeah. Over here.
Oh, yeah, just another one. Like, so you do some pre-seed stuff too, right?
Yeah, mostly pre-seed and seed. Yeah.
That's kind of the meme, right? Where like VCs are investing in pre-seed companies, but there's still so much. The expectation is still super high.
Yeah.
Like, higher than ever. Like
There are. Yeah.
if you put on your VC hat right now, or actually no, if you take it off, right? If you take your VC hat off, like what is the right time to actually go raise that round?
Yeah, so I met a startup today that has 3 million of ARR, and they bootstrapped.
Wow.
And now they're ready to raise. And I'm like, why are you raising now? Well, we need to scale now, right? We need to hire. We have a lot of demand, and now it's time to raise.
If you're not cash flowing like positively, is it even worth it to try to raise? Like,
It's exponentially harder to raise when you're pre-launch, pre-revenue, right? If you can bootstrap it and get at least the product going, and you could prove to a VC like, hey, I could build a quality product. I got some pilots going. They're converting at this ratio. And better yet, I have ARR and 5-6 digit ACVs. And I've proven that I can take something 0 to 1 without somebody having to pay me money to do it, right? And now that barrier, especially if you're using AI and Cursor and whatever other tools are out there, you can be 5 to 10x more efficient in building, and you could go into Replit and just like vibe code your way to something, right? And there's just no excuse now. I think so. I get this pushback from founders sometimes. Well, I thought you were a pre-seed VC, and I'm like, yeah, I am, but like, I'm backing companies. So every time I failed as a VC, I invested too early. Every time, and I haven't failed that much. Out of 260, 270, I've had maybe 10-ish shutdowns in 5 years. And the reason I've only had 10 shut down is I almost always invest post-launch, post-revenue when you're default alive. Because if there's 2 or 3 co-founders and you have 20 or 30K of monthly recurring revenue, like the risk goes down dramatically, like an order of magnitude. Because if shit hits the fan, you guys can just like cut burn and like stay alive, right?
So
and find the product market fit.
So at what point should You kind of started it, but
Yeah.
when should someone knock on your door and say, I have a pitch?
Well, I would say all the time, right? Always be raising, just like always be closing, right? Like until you get a Series A, you're always going to be raising. You're going to have an open safe. You're always going to be raising. Take money wherever you can get it. Friends, family, angels, anybody, just take that money. Not saying I'm going to invest, but like you should always be knocking on doors and using lead miner or whatever tool it is to.
If someone isn't kind of what you would invest, would you still at least want to see them, get their pitch, and then at least sort of maybe file it away?
Yeah. So what I do actually now is I have an Airtable and it has my prompt in it. I have you dump the files in there, and then it reads it, and if it's below a certain score, I automatically reject it. But I give you feedback from the AI. Like here, based on this 2,500 word prompt that I've built up over thousands of deals, here's what I think about your deal. And here's what I want to see before I invest, right?
Smart, yeah. My last thing was just I'm curious if you've seen anything with valuations. Like I have no idea what companies are valued at when you come in at that stage because anybody can kind of vibe code together like an MVP or something. It's not like how it was 10 years ago when you really needed a lot of like technical expertise. Like are people coming in and raising at like a $5 million valuation trying to raise, like what is that like?
I've seen everything.
That standard issue.
Yeah, I'd say pre-seed probably averages about 7 or 8. Seed's probably 20 to 30. But there's a high variance around those means. I mean, I've seen, the OpenAI CTO left and had a $10 billion seed, right? So that's like the highest seed I've ever heard of.
10 billion.
And I've seen people raise, hey, I'm raising 250K at a 2.5 or 500K out of 5. But it really comes down to like, it's supply and demand, right? Like if you have investors lining up to invest in you, like you came out of Speedrun or YC or HF0 or name your favorite accelerator, and you're a badass and you guys have history together and you left OpenAI, you're going to raise like, I've invested in companies, they went from 0 to $1 million of ARR in 3 months at a 40 cap, right? So it just depends. It's really like what you can sell, right? Yeah.
Justin, do you have a question?
Yeah, what's the URL to drop our info in?
It's on my website. Yeah, I'll happy to share it. Actually, it's on the pitch form. So if you go to pitch us, in the pitch form at the top, there's a link. Hey, find out what I think before I tell you what I think. And it's like a little.
And what's your website?
So teamignite.ventures.
So is it a pitch deck or something that you put in the forum and then?
Yeah, you can basically dump your. Yeah, you can dump your pitch deck, any documents into it. It's a GPT, right?
Yeah.
Okay.
You were kind of alluding to this earlier, but you basically said that you were really attuned to like Y Combinator material, Y Combinator companies, Y Combinator founders. So for the companies or the founders who are not up to that standard, what are some social traits between them that hinders them from becoming said Y Combinator material?
Yeah, I think we talked about it a little bit. I mean, I think YC kind of indexes on intelligent teams with a history together. So I think, like, as a founder, what you're really pitching to the VC is like, hey, we're the right team at the right time. There's no better team than us to do this, and here's why. This is going to be category defining, transformative. Oh, by the way, we bootstrapped it to 250K of ARR, and we have this moat, and here's our grand vision for the future, we don't have a plan B. There's nothing else we'd rather do, right? Oh, and like we'll never exit. Like there's like 100 things like that are circulating in my mind when I evaluate a team, and I've written articles on it. So it's there on my Substack. You can just go read it.
John?
I know because I've applied to the Y Combinator every year. That's always got to get back in the
Well, and they're not the only game in town. I mean, Techstars is pretty good. Yeah.
People applying, so that's what you have to look at too.
Yeah.
So unless you know somebody or you just go viral on.
Yeah, there's great founders everywhere. I'm sure there's a couple of great founders in this room. Probably most of you.
Difficult.
Oh, no, I was saying I'm a great founder.
That's right. I overheard you had 600K of ARR. I kind of perked up.
Yeah. We got almost 1,000 locations.
There it is.
But we're getting there.
Nice. That's important. It's important.
And he was in his previous startup. He was at 500 startups.
Okay. How was that experience?
It was great. Yeah, I went through 500 startups, and at the time it was called Accelerators, now it's called Forum Ventures. So we went through both of those accelerators with different companies, and yeah, it was amazing experience. Great network. I mean, a lot of those people that invested in that first company invested in this one now.
Yeah.
So
Who-
raised almost 600K.
Who's the founder in this room? So a lot of you. Who's a first-time founder? Now, who's been through an accelerator? Okay. Every time I encounter first-time founding teams, I almost always tell them to go to an accelerator. Just do it. There's so many unknown unknowns, and you know the tier 1 and 2 accelerators. They're so good at just taking you over that 3 or 4 month journey and propelling you to a fundraising event, right? Because
So if you see a founder team go through an accelerator, does that give you some
it
comfort?
de-risks it a little bit.
Okay.
Yeah, it de-risks it a little bit because now I get to go to demo day, and I don't like to go to demo days. Frankly, it's just like send me your deck. You know, I can go through a whole demos day worth of decks in like just 1/10 of the time. So I don't like to sit through demo days. Getting me out of my house is actually quite a feat. So thank Rich for that. I'm usually just sitting in my pajamas, taking Zoom calls, and I love it. I love my life.
You actually wear clothing?
Yeah.
I'm kidding.
I got my shirt on.
Any other questions? All right, so I'm going to go ahead and wrap it then. Because what time is it? I have my watch died. Okay, one more.
One more.
If you think, all right, so like, if it's 9 innings long, like, let's say that the end is when the robots like purge us from the earth, and here we are now.
AGI 2027.
What stage are we at right now?
Yeah, that's my favorite subject. I've been a singularitarian since the 90s. I read Age of Spiritual Machines in 99, you know, Singularity's near in 2005, Singularity's near in 2000, whatever it was, 24. You know, and then you got the situation awareness paper, Leopold's paper. If you guys haven't read that, you should totally read that. AI 2027, which is really like AI 2028. That's a good paper. I think I take the more Kurzweilian view is that we'll merge with our machines before they stamp us out like Terminator. And I think you're kind of starting to see that with like Neuralink, portfolio company, by the way, Neuralink. We didn't invest in the pre-seed, I wish. We invested much later stage, but so I think you're gonna see us merging with our AI in the coming years.
Being human batteries?
Huh?
Human batteries?
No, probably not Matrix. No, but it'll be interesting. Just like like if you leave a room without your phone, you kind of feel naked and you need to go back and grab your phone, right?
That's actually true.
I think that'll be us with our AI cognitive layers and eventually that cognitive intelligence is so many orders of magnitude greater than our biological substrate that we won't even feel like we need our biological bodies and brains anymore.
That's crazy, dude.
But that
You
that might
just say that, did you?
Oh yeah.
So
What, test tube files?
no, I think we'll just kind of merge with our AI and we'll just be in the machine.
In the ether? Oh.
We'll be able to manifest physically, like with nanobots and stuff. But yeah, this is all like pretty 10, maybe 20 years in the future. So we got some time.
hopefully I'll be dead by then. So is there anything that our community can do to help you?
Well, yeah, I mean, send us great deal flow, right? Refer us investors. We're always raising. I'm raising Fund 3 right now. So if you know anybody looking to invest, happy to talk to them.
How big of what's the investment point, out of curiosity?
For like an individual?
Yeah.
We typically ask $250K, but we're flexible.
Okay.
Yeah.
All right, so let's go ahead and wrap it up. Thanks, Brian, for coming out of your shell.
Yeah.